Okay, we're back and actually back in looking at Procter and Gamble's weekly chart. I've done a few videos on this describing the change in trend reversal that took place in 2018 and the strength of the trend and the fact that the 18 and the 40 were parallel all the way through. In fact, they still are right now. But I put the zigzag back on because I wanted to make so this is a 5% zigzag. And this line does a really good job of if you're paying attention to momentum and what I described the last time, just to bring everyone up to speed. You want to compare the length of these moves. And if you remember the last video, we were at this high right here, right at that peak. And I said, if we turn down from here, there's that's a sign based on price alone, without looking at indicators or anything, that we're losing momentum. Because if you're comparing these swings, this move to this move showed really good strength. This move to this move wasn't quite as big as this, but it was still very good. It was pretty close. But once we took this little high out here and didn't really follow through, I just had the sense, because at the time we were here, it was the hard right edge. I mean, we were right at the peak. I just had a sense based on the way this had dropped before and the way it had tried to break out that it was the trend was getting late. So one of the things I really wanted to point out is that if you look at price and you understand what you're seeing, you're going to have a huge, huge advantage over indicators. Because if you look at something like ADX, or if you look at the MACD here, MACD made a high, made another high, and it made another high. It's not diverging based on the MACD line itself. If I wanted to look at maybe the divergent or the histogram, you can see that the momentum was slowing. But you really want to be able to look at price and determine whether the strength of the trend, how much strength you have in the trend and how long has the trend been going. So I think that's important to be able to recognize and see when this is taking place on price alone. And so that's our starting point for this video. I want you to look at, so I'm going to split the screen. On the left chart, I still have this weekly with the swings on it. I'm going to leave that on. As this is breaking through the prior peak, we know there's an issue here because we're losing strength. So then I'm going to go down to a daily chart. So there's a few things that are really important about this. First of all, when you have this type of divergence, you're not necessarily expecting a big breakdown or a big reversal. Divergence doesn't say that you're going to reverse. All it's telling you is that you probably, not always, but the likelihood or the probabilities are increasing that you're going to retrace back to support. I view support two different ways. I would look at it conservatively back to the moving average line. And more aggressive would be back to the prior support. So those are kind of your two target areas, depending on how much of a reversal you think you're going to get out of this pattern. And, obviously the fact that we had been making higher highs and higher lows for a year and a half, it was a long trend. The longevity of the trend was another factor. And what I pointed out when it broke out, that there's a lot more risk buying this breakout here than this one or this one, because these are a lot earlier in the move. So anyway, when I'm looking if I want to play a reversion to the mean trade, meaning I'm looking at this as a failure and I think it can retrace back down, I usually use a conservative target back to the moving average. In order to make the risk reward make sense, I have to go down to a smaller time frame. I can't just short this and say, okay, I'm going to use the high of this move, because you're lucky to get 1-to-1 that way. So I'm going to go down to a daily chart and, starting from this low and basically draw the trend line in place off the bottom and see if I'm going to create any kind of a 1, 2, 3 type of a top pattern, and what are the momentum characteristics. So if I go and look, I don't have momentum divergence using MACD on this time frame. But if I go to a daily chart, look at what takes place. You made a new high here, and then you pulled back. And MACD made a new high at that same time and then pulled back. But look what happened when you made a new high at this point, which is the all-time high on this chart. If I'm going down and looking, you made a bounce up, you made a new high. MACD is making a significantly lower low on the daily chart. That's a pretty significant divergence. You're making a significantly lower low while price is making a higher high. Sometimes you'll just make you barely make a higher high and you get this kind of a divergence. Or sometimes you'll make a higher high here and this makes a double top. But, this is a pretty strong divergence, I think. And then, so you're going down to this time frame because you're looking for entry. You know something's going on the bigger picture that's saying, I'm going to retrace back down to support. What I've done on this chart, I have kind of a little fancy line here. This stair-stepping line is actually this 18 MA transposed onto my daily chart. I had a guy program this for me. An alert target has been reached. So that you can actually use the weekly 18 on your daily chart so you can really see what your target is. This would be my target. If I'm going to look to short this on the daily chart, I'm just targeting for here. I'm not trying to be a hero on a divergence play. It's a reversion to the mean trade. You're going counter to the trend. So in this case, I did get the trend line break. I got my rally back up and test to the high. That would be your 1 is your break, 2 is your test. And now look what happened to the MACD. You got your little pinch and 1 high, 1 higher low, 2 higher lows, 3 higher lows while this is pinching. So when I see that taking place, I know when a pinch play happens right after divergence, I'm starting to get kind of excited because I think that is the natural sequence of events. You get a divergence and then you follow it up with a little kind of rally that fails. And if you notice, it happens to be a 40 to 18 bounce as well. So I've got everything kind of working in my favor. I've got a break of the trend line. I've got my 1, 2, 3 change in trend developing. I've got my 40 to 18 bounce developing. These are all things that are in my book, by the way. And I have other videos that are describing some of these things in detail as well. But you want to be able to go through and say, I'm looking for a pinch play, but I'm also want to make sure the price structure is in agreement. So I'm getting my 1, 2, 3 sequence. I'm getting my bounce off the 40 and the 18's kind of rolling. But the key level here is saying I'm pinching under here. I can short this underneath this single bar. And I can put a stop right underneath, right above this 124 level. So my risk reward is, you're really talking about maybe about 1.5 points. If there's a little bit of slippage, maybe it's a little bit 1.75 points. But I know my target is all the way down to 118 essentially. So I've got at least 2 to 1 to get to that level down here. And I think that's very acceptable for a reversion to the mean type of a trade. So that is essentially how I would play this. I'm looking at price action on the lower time frame, trying to determine if I'm getting a change in trend developing, and if MACD can help me give me a little edge so I can get in a little bit earlier, then I can actually play these reversion trades back to support. It's possible this is going to keep going. But again, when you're playing counter to the trend, you don't want to be too liberal with your targets. You want to play it more conservatively and try and bank profits on these type of trades. So that's kind of how I would handle this, how I would use the higher time frame as a target, how I would look at the fact that the swings don't really, the price action itself on the weekly was telling you that it was getting tired. And then I would go down to the smaller time frame to get my entry.